In this video, I'm going to teach you my exact trading strategy that I use every single day and make money. I also use this exact model to trade live with my students. If you want to trade live with me, there's a 7 days free trial. Come join me and see the results yourself. Now, this is one of my Apex accounts and I've made around $4,000 in the past couple of days on it. And I'm ready to withdraw these out. But I promise you, I'm not going to hide anything in this video. I'm going to reveal everything so you guys can make money as well. All right. So the strategy is very simple. It is very mechanical and you have to follow these set of rules to make money. Okay. So very simple stuff. The very first thing that I do always is I go and start my day on the daily time frame. So I go onto the daily time frame and I see what the market is doing. Okay. What is it doing? I just need to get a basic idea of what the market can do on that specific day. Okay. So over here, where you can see, I'm going to give you a rough example on how I would analyze on the daily time frame. Now on the daily time frame, we have swept this high over here and we were inside this daily auto block. Right now for the next day, I can have a little bit bias about being bearish. Okay, now this step is not compulsory. Okay, I only do this to get a rough idea about what the price can do in the coming days or on that specific day. Okay, but the real strategy is on the 15-minute and 1-minute time frame. So here is how it goes. Okay, the very first thing is that you have to mark out the 9:30 open. Okay, so we are not gonna trade before 9:30. We have to trade what after 9:30. Okay, so make sure you know that 9:30 till 11:30 is our trading window. Okay, we have to look for trades inside this window. Now, what is the strategy? On the 15-minute time frame, what you have to do is mark out fair value gaps. Okay, so let's assume that price is moving up and we formed a fair value gap right here. And let's also create this. Okay, now let's assume that there is a fair value gap resting around this level. Okay, and price dives down into this fair value gap. Now, when we have that, you can also see we have left these clean equal highs over here. Now, these clean highs, equal highs could be on the 15-minute or on the 1-minute. Okay, but if they are on the 15-minute, that's going to give you more confidence. Now, step one, we wait for price to tap into this fair value gap. Okay, now this is A plus setup. I'm going to teach you A setup as well, where you look for less rules, but this one is the best A plus setup. Like when you see this type of setup, I promise you it's going to play out in your favor most of the time. Now, when price is inside the 15-minute fair value gap, the next step is very simple. And you have to look for SMT divergence inside this fair value gap, okay, with a correlating asset or pair. Well, we're not trading Forex, so we're not going to look at pairs. We're going to look at assets. This could be ES, and I primarily use ES to look for SMT divergences. Now, when price is inside the 15-minute fair value gap, what we have to do is drop down to 1-minute time frame, and within this level, we have to look for SMT divergence with ES. Now, let's say that this is ES, right? Let me just try it out. Okay, perfect. So we have the same fair value gap, or there's no fair value gap on ES, but on NQ. Now, what is SMT, right? So let's talk about this. Okay, so on the 1-minute time frame, we made lower low, lower high, and then a lower low on NQ. But on ES, we made a lower low, lower high, and we failed to create another lower low. Now that is SMT divergence. Now that is step two. When we have SMT inside a 15-minute fair value gap, the next step is our entry model. Okay, very simple stuff, and it is very easy. Now on the 1-minute after 9:30. And one more thing to note is that if there is a news at 9:30 or after 9:30, we have to wait for the news event to be over. And I'm talking about red folder news, not orange or anything, but red folder news, because that is the most important. Now, when we have SMT divergence, make sure prices swap some form of liquidity on the 1-minute time frame. And then inside this leg, from this low to this high over here, we have to mark out all the fair value gaps or a single fair value gap. Okay, so if there's one fair value gap inside this leg, we mark that fair value gap out. Okay, and let's make this a little bit different, and let's make this green. Okay, now what we have to do is wait for price to inverse that fair value gap. Okay, so when we have inversion above this fair value gap, we reject this fair value gap, and we close above it, that is basically your entry. So what do we have here, guys? We have, first of all, we have SMT divergence with a correlating asset, right? We are inside a 15-minute fair value gap, and the next step is that we have inversed this fair value gap. Now your entry is going to be on the close right after it closes above the fair value gap. Your stop loss goes below this low, and we kind of target 1 to 1.5 or 1 to 2 risk to reward, okay? And risk management of the strategy is the most important thing. Without the risk management that I'm about to teach you right now, this strategy is not going to work. I promise you it's not going to work. So make sure you follow the exact risk management strategy. Now, look to the left and mark out the most recent and closest liquidity level, okay? And what I see here is that we have this high over here. Now, when price reaches this high over here, we are going break even right there. Okay, we are being safe, we are protecting our capital. So you go break even as soon as the most recent high is, or most closest high or liquidity pool is swept. Now when we are break even, we are risk free. So now what I want you to do is take one partial at 1 to 1 risk to reward ratio. Now over here, when price reaches 1 to 1, that is your first partial. Now the second partial comes at 1 to 2 risk to reward, and you're gonna take your second partial, and the final TP is gonna be towards those equal highs that we marked out, because NQ is crazy and you are gonna get these type of moves every single day. If not, I wouldn't say every single day, but every single week, 3-4 days. So yeah, that is pretty much the strategy. But one thing I need you to know is that ideally we want to see NQ not create the lower low like that, right? And we want the ES to create the lower low. Now, why is that? Because NQ is stronger in terms of being bullish, while ES is stronger in terms of being bearish, and it is weaker in terms of being bullish. But over here, we are bullish, okay, on NQ. That momentum is bullish because we failed to create another lower low. We have a lower low, lower high, and then we failed to create another one. Now, that is your entry, and you can write it all along. So that is pretty much the strategy, and same would be for the short positions, right? We kind of look for inversion, right? And that's pretty much it. So now I'm going to give you guys some examples so you guys can learn properly. Okay, now before we to the examples, I want to teach you the A setup. Okay, so this is not A plus, but A setup. So all you are really looking for after 9:30 open is 1 minute SMT divergence and then inverse fair value gap entry. Okay, so for example, let's say that NQ fails to create a higher high, but ES makes a higher high, higher low, and then a higher high. Okay, now when we have SMT like that, that's like A setup. It's gonna work out, and I trade this as well when the A plus setup is not present, and we have a very solid win rate. Okay, now inside this leg, there could be one fair value gap or there could be multiples, right? So for example, if there are multiple fair value gaps in this leg, you have to mark all of them, okay? And then you have to wait for all of them to get inversed, okay? Not one, but like all of them. And the last one as well. This is very important. Now, when we close below the last one, that's when you take your entry. But if there's only one fair value gap, you then take your entry like this. Okay, so that is like A setup. It works fine. Okay, so don't worry that you have to look for, you know, price to tap into a fair value gap. Yes, if you have a 15-minute SMT divergence, that makes the setup even better. But this should be it. Okay, now that we know everything about this model, let's move on to the examples. All right, guys, so here is example 1. And can you guys find out a setup before I even mark out the things? Well, if you marked out this low over here and this low on ES, you can see that we had a SMT divergence with this low over here. And we also kind of tapped into this fair value gap on ES. Now, we want to prioritize the setup when this NQ has bullish strength. So we didn't take out this low, so we want to trade this. Now, in some cases, it can take out this low, and that's fine. You know, it just decreases the probability of that setup playing out by a little bit, but it shouldn't be an issue. Now, inside this leg, what we have are multiple fair value gaps. We have one here and one here, okay? Now we wait for the last one to get inversed. So this gets inversed right here. Okay, so that is your entry right away. Now you can put your stop below the bodies or below the low. I like to keep it below the bodies, okay? But you should do it in the when you are starting out with the strategy. Now, when you have this, you can basically just take your first partial at 1-to-1. You will go break even when this high is taken out. So that is your break even zone. We didn't get close at break even, right? And that is during the PM session trade, okay? That's cool. Now, over here, where you can see the price is just, it keeps going up and up and up. So that's the beauty of NQ, okay? Now, we trade till 9:30 and 11:30, as I said before, but then you can also trade the PM session, okay? You don't want to trade from the 11:30 till 12:30, okay? From 11:30 till 12:30, that's like a red zone, so avoid that 1 hour time. Now, that is a beautiful trade. Now, let me give you guys a couple of more examples. Now, here is another example today. It happened today again on the same day, guys. I'm telling you, it happens over and over again. We have SMT with this low on NQ. You can see we took out this low on ES, but not on NQ. Now, where is the fair value gap? Okay, so we have one fair value gap here, one fair value gap here. So we want to wait for price to inverse the last one. Now, this would have been your entry. Your stop would have gone below the body, okay? And you can clearly see that we are going up. And now we have hit almost 1.85. So yeah, that could go to 1 to 2 as well. Now, I'm showing you this example because even though your stop loss can be big, this strategy gives you big moves like this, okay? We have SMT, right? That's like a setup, okay? And again, you don't really need to see price tap into the fair value gap. If it does, you can basically risk a little bit more on that trade because that probabilities increase. All you're really looking for is just a liquidity sweep, SMT divergence, and that's pretty much it. Okay, beautiful trade right there. Break even somewhere around here. So when this level was broken, this is the closest liquidity after our entry up here. That's your break even zone. 1-to-1 is where you take your partial. 1-to-2 is where you're going to take second partial, or you can close your trade entirely. Okay. So now let me give you guys a couple of more examples. All right, guys. So here is another example. And can you guys identify SMT divergence? Well, if you marked out this high on NQ and this high on ES, you can see we have SMT divergence, a clear one, right? Now, all we're doing, so since I don't trade ES, I'm still going to trade NQ, even though we have bearish weakness and bullish momentum to the upside, okay? It doesn't matter, but it's just going to decrease the probability by a bit. But now what we want to do is from this dealing range low to this dealing range high, we have to identify fair value gaps, okay? And we have this tiny bit over here and we have over here. So you can see tiny bit here and a little bit here. And then below that, there's nothing. And then after that, what we have is this low, okay? Now, when price closes below it, what you're simply doing, literally just entering right here, okay? And you're basically going for 1-to-2, and yeah, that's pretty much it. And then again, this is where you would go break even. And then at 1-to-1, you would take one partial, and you're gonna hold till 1-to-2 risk reward. So the simplest and easiest model, I use this model every day and trade live in front of my members. And if you want a 7-day free trial, there's a link down in the description. Don't pay me until you see the results, okay? And I promise you, you're gonna stay there in the Discord because I am killing these markets. So I'll see you guys in the next one. Take care. Goodbye.